Hello everyone, my name is Matthew Frailey. I'm the founder of BreakpointTrades.com. Been bringing you advanced technical analysis, market commentary, trade ideas, and mechanical systems, trading algorithms like you see here since 2003 for individual traders and high-end professional institutions, which I consult with on a weekly basis. All right, so let's go ahead and get started here. This is the back end that I use for the standard format newsletters that we send out for the website. Anyway, this is a comprehensive market newsletter for Wednesday, September 7th, 2022. What I'm going to discuss tonight are, of course, we're going to look at the general market, cover the major indexes, going to look at some indicators, bonds, major sectors, just do a quick snapshot. We're going to look at the US dollar, commodities, precious metals, GDX, and some individual precious metal stocks, which actually had a pretty good reversal today. We'll follow up on trade ideas. I did add some new ideas tonight. Now, a couple quick comments. As I alerted our members, I am running a bit behind. And as you know, we were on the lookout for an oversold snapback rally. We were quite oversold. The NIMO was buried. We've been discussing that the last couple of days. Plus, 3 of our reversion to mean systems took long trades. The way those systems work, it's kind of like a rubber band. It gets too stretched, so you look for a snapback. And those systems were scaling into longs, anticipating some sort of snapback rally. And that's what we got today. The S&P rallied 1.8%. That's a nice day, over 70 points. The NASDAQ rallied 2.1%. Now, the major indexes did close below their respective 9-day exponential moving averages. So even with the big rally, that shows you how stretched we were. We closed below the 9 EMA. Okay. Tomorrow, we have Powell speaking. Obviously, the market's going to be paying attention to that. Now, given how oversold the market was, I do believe that we'll have follow through to the upside. So I am looking for higher prices and, possibly the 40-50 area on the S&P. There's a downtrend there, which I'll be discussing. So those would be areas to look for a good objective shorts. Don't, forget the backdrop of the market. We are in a bear market, guys, and I think it could be very ugly this fall. Breakpoint Trades has been really on it this year. Steve and I were talking about a bear market warning way back in December. We were way ahead of the game. And then we officially called it in early January. So our market analysis has been on par this year. And the systems have been on par as well. And I'm going to discuss the system trades. So I sent out a trade notification to all the subscribers regarding some of the reversion to mean systems. So let's go ahead and discuss those before we get back to the general market. So the first image here, item number 2, let me zoom out on this a bit. All right. So this shows you some of the open system trades for this year that we were in recently. Okay, we had quite a few systems that were open. Here in the upper left, that's the bear long. And kind of as the name implies, it's a system that looks for long opportunities in bear market environments. And you can see some of the trades that occurred this year. Really awesome trade there from July 13th to September 22nd, about a 5-week trade. Nice little trade here at the bottom, a little quickie trade there. Now the bear long for ES, it's scaled in a couple, 3 times. The third entry was really what made money. And the way these systems work is they scale in leveraged for each additional entry. So, for example, the first entry would be 1 contract, say on ES. Second entry would be 2. Third entry would be 3. All these reversion to mean systems did close out today, as you can see here. Here's SPY. The bear long on SPY. This one is a nice trade because the first entry is essentially flat. The second entry, we double up there. And so that one made money. The QE 3.2 right here. This system, as I discussed the other day, is a system that, remember this is the system on the upper right. It rarely triggers. It only usually triggers in really oversold conditions. It's got 100% winning trades, and so that obviously The fact that that went long the other day was a good sign the market was looking for a low. You can see some of these S traps, they were the same thing. They scaled in and they all exited today. Now, I bring this up because officially for the website, I let everyone know that the systems all exited. Okay, so if you wanted to follow the systems, explicitly, you'd have just exited today and you'd have made, even with some of these early entries, you still would have made money overall on the system trades. However, I did elect to personally keep some open positions outside the systems because I do think, or at least favor, some more upside movement in the market. So I want to get some better exits. So let's go over those. So image number 3 below, this shows you the live trades this year so far for the 21 reversion to mean systems on SPY. You can see there's been a lot of trades this year. These systems love bear markets volatility. They do better in those type of conditions because markets get to more extreme points. A good way to think about the reversion to mean systems besides the rubber band trade, again, it's kind of like the reversion to mean systems are looking for extreme conditions in the market and then looking for those to reset, hence reversion to the mean. All right, so you can see there's been a lot of trades this year, some shorts, a lot of individual longs. And if you look here on the open trades, so what you can see, I officially closed out the bear long at the bottom. So the first entry was SPY, the second entry was the SSO, the 2-time leveraged ETF. So you can see the first entry essentially was a flat trade, lost a tiny bit, $10, $11 on $10,000. The second entry would have made about $360. Now, if you could see the S trap, I elected to close the third entry, which made nice money, $410, and I kept open the first and second entry, which are currently down still. So I'm hoping to get some, for those to come up, maybe even go slightly positive. So again, I'll keep you abreast of what I officially do, but overall, it's been a good year for these systems. Next, image number 4. This shows you the option trades that I sent out, and you can see the 2 option trades that I left open, and you can see at the bottom the option trades. Look at that bear long. The second entry would have made about $850 on 2 contracts. All right. So congrats, you've been taking the systems. I also have the systems for the ES, MES futures. I'm not showing that here tonight. We have a similar action there. I took partial profits and I kept some positions open. All right, let's go ahead and move back to the general market analysis. So item number 5 shows the index sector table, what transpired today and this week. So you can see solid gains for the market today, up 1.8 to 2%. Everything is up now for the week. As far as the major market sectors, most of the sectors were up today, broad-based rally except energy. Currencies, US dollar had a big reversal, down 0.7%. As you know, the dollar's been on fire, but big reversal today. And cryptocurrencies, they moved up with the market as expected. But even though the dollar was down, commodities really took it on the chin today. Crude oil down 5.7%. That's a big culprit. The index down 2.4%. Natural gas down 3.7%. Again, most of the downside here except wheat. Precious metals, though, were up nicely today with that dollar. Gold up 1%, silver up 2.8%. GDX, the miners, the stocks up 3.75%, so they outperformed, and that's what you want to see. Bonds, high yield corporate up with the market. 20-year bonds down, up as well. Next, item number 6 shows the economic news calendar. Tomorrow, September 8th, Thursday, we have initial jobless claims, natural gas inventories, and remember, Powell speaks. So obviously the market's going to be paying attention to that. All right, let's go ahead and jump to these index charts. So the first chart below, item number 7, shows a snapshot of the 5 major indexes on just simple daily charts. The Dow at the top, the S&P there in the middle, the NDX below, Russell at the bottom, IWM. By the way, in the Russell, you can see it bounced off this extended trend line. But if you look, nice day for the market, but managed still to close below the respective 9 EMAs on all the indexes. So that's your short-term resistance. We'll see if we can get up through there. I'd love to have a move up through here, maybe even get up on the S&P 40/50, maybe even the 20-day moving average. Those would be areas that I'll look for shorting opportunities. Again, otherwise, market was very oversold and stretched and due for a snapback, and we got that today. Simple reversion to mean so far. Next, let's go ahead and shift back to the S&P 500 charts. That's our main focus usually. So here's the daily S&P. Again, Steve and I called for a bear market. We confirmed that in early January, and we warned about it in December. So those of you who've been with us, we've been on it on par. And those of you who are new, I think we've done an awesome job about calling the market this year. Anyway, we had a nice trade low in June, chopped around a little bit, then had that nice rally in July into mid-August, fit seasonality. The S&P stalled right at the 200-day moving average. That was an amazing short up in there. Got near this downtrend line, connecting to recent highs. And, we've had a hell of a sell-off from the highs. From 43.25 all the way down to 38.86. So one hell of a retracement. Again, you can see an uptrend line here connecting the June lows to July lows. This was a logical area to bounce off of. Plus, we had a 61.8% fib retracement from the lows to the highs. Remember that 61 fib? I call it the master fib. That's always an area to look for reversals, and that was a big move. A logical area to go long, the SPY systems, ES systems, reversion to mean systems taken along there, just made sense, right? And anyway, big rally today, but again, we're below the 9 EMA, and here's the 50-day in red. So these are your first resistance areas. What I'm thinking, though, on a decent rally, I'm watching this downtrend line here from the recent highs as a target area. I'll be watching areas like that for potential shorting opportunities. Next. Chart number 9, here's the daily KISS system. Remember, this is unlike the reversion to mean systems. It's a trend following system because we're in a bear market. It's been in cash most of the year, except for a couple times. And this last time when it went long in July, it did actually catch a winning trade, but then stopped out. So during bear markets, the KISS trend systems are usually going to be in cash, or they may go long the market for a month or two at most. You can see at the lows, we had a divergence on this moving average derivative indicator. The two moving average ribbons here, the BPTMA Deluxe, it's below the ribbon, so they're now bearishly stacked. Notice how the BPTMA Deluxe turned green today. So one thing to watch is for the BPTMA Deluxe to pinch on the underside of the ribbon. That could provide a shorting opportunity, okay? So that's what I'll be watching for. That and, the ATR here, that's an area of resistance to watch as well. Next. Chart number 10, here's the cycles on the various time frames. Now, these have been pretty good too. So here's the daily S&P, the upper left. We had the amateur buying that basically marked the highs on the daily. Broke the ATR, big sell-off. And the last few days, we had the buy cycle here. It's cycle support. And pretty close to a DeMark 9. So that was a logical area for the market to try to bounce, and that's what it's done so far. We had a DeMark 9 on a half day over here, which near the lows. On the 60-minute at the bottom right here, we had basically just the cycles perfectly got it. You had an end of bear cycle right here, basically got the low, and price rallied right to this ATR indicator here, which is initial resistance, where we're pausing from logically. But what I favor here, little pause and then an eventual breakthrough here again. The market should ultimately get a bigger bounce than this, but we need to get over the 9 EMA, get over this resistance. Next. Moving back to the traditional chart, chart number 11, here's a 2-hour view. Again, you can see this trend line retest, 61.8 fib was a logical area to get a reaction bounce from. We had divergence on various indicators, MACD, RSI. Now we'll see if, get some follow through. Next. Chart 12, here's a 60-minute view. We're basically hitting another trend. You can see how we're hitting a resistance here as well into the day. Next. Chart 13, here's another 60-minute chart where, we broke this uptrend line a few weeks back. That was a big warning to, get out of Dodge, get short, and formed a lower high here, sold off. Now you can see, you can now draw a downtrend channel. Steve discussed it last night. Again, we bounced off this lower trend line. And this is the largest rally in the downtrend. This little, so far we're about, 90 points off the lows here. But again, so we haven't broken any symmetry. This rally's still less than that. But ultimately, I do believe we get to follow through. Obviously, you want to see this uptrend line hold. If we were to reverse down tomorrow or this week and lose this, that would not be good. Of course, there's an open gap down here. But, to me, this is key. Should this the market should not retrace today's rally if this is, we had a decent low here. This downtrend line of the channel is an area I'll be watching. We get up into this area for potential shorting opportunities. Next. Chart 14, here's a 10-minute view. Steve showed this last night that price was coiling. You can see that played out. We busted it out nicely from the coil. Next. Chart 15, here's the triple Qs daily chart, from this year. Now the Qs did break their uptrend line from this July lows. So this broken uptrend line is now a resistance area to monitor. And you can see we still have some room. So we'll see if price stalls on that trend line or not. Finally, chart 16, here's a 2-hour view. Shows you a little better look. You can see the trend line here, broken trend line. Nice rally today. Like up in here would be an area to watch for resistance. This broken trend line and this downtrend line. This is an objective area to look for a potential shorting opportunity. Again, could price go through here? Yes. But right in here, you could try a short with a tight stop, especially if you get a trigger. Next. Chart 17, here's the QQQ KISS system. Again, very similar look to the S&P. Caught a nice long there for, just over a month. The DVT was hit, so it stopped out. Otherwise, again, BPTMA is bearishly stacked into the ribbon, so we'll be watching, up in this area for potential major resistance. Next. Chart 18, here's the cycles. Again, very similar look to the S&P cycles. On the daily, though, note that in addition to the cycle buy from yesterday, which marked that low, we added the mark 13. So really everything lined up here for a pretty good trade low. And on the 60-minute here, of course, looks very similar to the S&P. You had the end of bear cycle, perfectly timed that low, and we have the ATR up here as resistance. Next. Chart 19, here's IWM. And nice rally today as well. Again, 9 EMA here, 50-day moving average. That's your next major resistance area to watch for. So that does it on the indexes, guys. Tonight, futures are essentially pretty flat, which would normally expect. Let's move on. Chart 20, here's the VIX. So the VIX, this VIX buy signal did play out, although it took a couple days for it to start kicking in. So whenever the VIX closed back inside its upper Bollinger Band here, that told you to be on the lookout for some sort of bounce. Also, right here, this is the correlation. So whenever the VIX has these uncorrelation spikes, it gets really uncorrelated with the market. Usually you get market inflections there. I've marked the past ones here. They all marked, inflections in the market, and you can see that's playing out. Next. Chart 21, here's a 15-minute chart of the VIX. Steve pointed out it had a coil last night. Well, busted to the downside, as you'd expect. Next. Chart 22, here's the chart with the NASDAQ with the the breadth, the new 52-week highs, 52-week lows, and the difference at the top. I haven't shown this chart for a while, but it's been very useful this year. Start of the bear market back here. Essentially, really, if you think about it, the NASDAQ area started their bear market late November, early December. But, you know, this highs minus lows, you can see it's never really been able to get back above zero. It did in here just slightly, but lo and behold, this has occurred right at the highs. And you can see whenever this gets near the zero area, conveniently tends to be near these market highs. You can see how far it is away from the highs. So again, going forward, this is obviously a useful indicator to keep an eye on whenever it gets near zero. Next, chapter 23, high yield corporate. Nice rally back today. Now this did close above its 9 EMA. That's a good sign. We can get some follow through in the market. 50-day moving average here would be next target. Next, chapter 24, there's the 60-minute chart we showed last night. You know, broke out of the channel. Next, chapter 25, TLT 20-year bonds. Essentially, you're looking at a perfect double bottom bounce here. Again, doesn't mean, you know, what it could do is rally here and then just reverse down. But so far, we have a potential double bottom. Remember, interest rates, like the 10-year, 30-year, move opposite to bonds. So with TLT up today, rates were down. Next, chapter 26, here's a 2-hour view of TLT. Nice clean channel to monitor. I like these channels. Next, chapter 27, this shows you some of the major sectors. Again, just being an intra-week newsletter, I'm not going to go over all the sectors. All the sectors were up today except energy. So, you know, I'm not going to go through all those. Just a snapshot of some of the major ones, transports and financials, industrials, banks. Next, let's move to commodities. So here's DBC, commodity ETF. It's been weakening. We've been showing this sideways channel for a while. Price stalled there a week ago, and really was leaking oil here. Finally busting down. This looks lower, guys, quite honestly. Next, chapter 29, crude oil. So crude oil initially did rally off this 85 support, stalled here at the downtrend line, 50-day moving average, and it's actually lost the 85 support now. You can see on that bounce back to the 50 MA, you had a bearish moving average squeeze. Next, chapter 30, natural gas. This is the tradable ETF UNG. We've been showing this is a rising wedge, and that has obviously been playing out. Though, no luck with natural gas. Doesn't look like this over in Europe and Germany especially, where Russia has completely cut them off. That's a whole nother story. I could talk, you know, I could have a major, you know, huge discussion on that, but this is not the time to do so. Next, chapter 31, DBA agriculture, also weakening, still holding this trend line for now. Next, chapter 32, URA. One of the areas in the commodities that are holding up is the uranium sector. They had a big rally last week, but they're holding in here, and you can see potential flag. Some of this area may be benefiting based on, you know, the potential energy catastrophe in Europe. They're going to have to rely on nuclear more, and some of these stocks have this bull flag look to them. Next, chapter 33, DNN, another uranium stock, kind of has a flag look to it. Next, chapter 34, Bitcoin. Bitcoin, this bearish rising wedge played out from the previous week. And, you know, it's not doing too much here right now. Still quite weak. Next, chapter 35, Ethereum, for now, still holding this trend line, but kind of has a head and shoulder look to it here. If it loses this neckline, this would not be good. Next, chapter 36, UUP, US dollar. Big reversal here today. That helped the precious metal market especially, which we'll cover in a minute. Next, chapter 37, UUP on a 60-minute. Leaking oil here, slightly breaching this uptrend channel that we've been showing. All right, let's move to precious metals. Chart number 38, gold. So gold had a night, reverse today. It's still below its 9 EMA, guys. So again, a first start, but we've seen this a lot of the year. So if you want confirmation, you really want a good close above the 9 EMA here. Some other confirmations, you want to see this GDX GLD ratio trend line broken. What that measures is are the stocks outperforming gold or not? The gold market always does better when the miners are leading, not the metal leading. And the miners have been underperforming since the April timeframe. Anyway, we did have a symmetry break off the July low into August here, so that did argue for a higher low. We potentially have one, but again, we need to see confirmation follow through. Next. Chart number 39, silver, also up today, but still basically closed right at the 9 EMA. Next. Chart number 40, GDX. Now, this is the ETF. This looks a little better. This did close slightly above its 9 EMA today. That's a start, so that's one positive. Again, keep an eye on the ratio here, but this is a possible start. We do have a MACD divergence here from this low relative to here. I don't have it drawn in, but we do. Next, chart number 41. Here's the bullish percent gold miners index, BPGDM. And this has not yet officially went on a buy signal yet, but the MACD did cross back here, which is usually a positive. So it is hinting that this will probably confirm soon. Had a great sell signal back here in April, of course. Kept you out of all that decline. The bullish percent indicator is now quite oversold here in the 12% range. Next. Chart number 42, here's the BPGDM with instead of the Rinco, it's the 8 moving average, and it is over its 8 moving average here. Next, I want to go over some individual names. So in case this sector does follow through, I went ahead and looked at some individual gold stocks to see if anything stands out. So first off, gold, Barrick Gold. Essentially what you have here is a double bottom potential. Next, chart number 44. Now, AG, this is a silver stock. I've been monitoring this for a while. I showed it back here in July as a falling wedge, which gave a trade. But I do think there's higher odds that it can form a higher low in here. And keep an eye on that ratio here. Next. Chart number 45, BTG. Here's a cheapie. Big volume today. The ratio on here did break, so this one has potential for follow through. And it also closed at its 50-day moving average, so it's quite stronger than the index. Next. Chart number 46, BVN. Kind of a double bottom action here. Nice volume starting to come into it. And it closed over its 50-day moving average. You can see the ratio here, BVN to gold, is turned up, so that looks positive. Again, a lot of these have had big corrections since April. You can see this sucker was $11 back in April, falling down to the 5s, so it's already had quite a haircut. Next. Chart number 47, IAG. Here's an interesting one. You got a potential wedge look to it. So this one looks lower risk. Again, it's had a hell of a haircut. This sucker was, $375 or so in April. Fell down to, low $1 range. So hope that's why you just can't buy and hold, guys. You need to have exits. But for down in here, potentially lower risk. Finally, chart number 48, HL. It's a silver miner. What you have here is a potential for a slanted inverse head and shoulder pattern if this higher low can hold. So there you go. There's some individual names. Now let's follow up on other trade ideas. Chart number 50, CPRX has been on the list. It was flagging into the 9 into the 20 moving average here. You had good volume patterns. You can see nice pop today. Next. Chart number 50, ARRY. Here's a new one to monitor. This has been on the list for a while. Still monitoring this one. If this can break out, has a nice flag look to it. Moving average ribbon starting to pinch. Good volume patterns. Next. Chart 51, APDN. Here's a newer one. Low price stock. I didn't look at the news. I don't know what popped it here from 70 cents to $7 in a few days, but it's come all the way down into here. This could be a lower risk area. Big volume move up, light volume pullback. A lot of times these can be explosive, so maybe one to watch. It might try to run again. Next, chart 52, STEM. Here's one, nice volume today, kind of has a flag look to it. Looks decent. Next, chart 53, SST. It's been on the list, hasn't triggered. You got a clean resistance at $12 to monitor. So there you go, guys. We will see what happens tomorrow. And see you guys tomorrow. And by the way, I do the newsletter tomorrow as Steve will be taking a personal day. Take care. Have a good evening.